Good morning, John. Better than expected news on retail sales. A little bit stronger spending by Americans. 0.4% increase on the headline for the month of October. The ex-autos comes in at 0.1%. Ex-autos and gas the same. And the retail sales control group, which is what people really care about, is actually down by 0.1% after a 0.7 gain in September. Import prices come in up 0.3%. Import prices without petroleum, 0.2%. Both of those stronger than expected. So it just continues this pattern that we have seen of a little bit of an inflation issue ongoing. And then the Empire Manufacturing Index, this is a go-figure number, up 43 points to 31.2 from negative 11.9. So an awfully strong number there in terms of New York manufacturing. New York manufacturing, of course, not all that important to the overall numbers, but still quite interesting. Taking a quick look at what moved in the markets or in the retail sales report, we had 1.6% gain in motor vehicles, building materials up 0.5%. We expected strength there, obviously, because of hurricane rebuilding. Clothing stores down 0.2 points, and we saw apparel prices collapse in the CPI and PPI, and general merchandise stores up 0.2%. So it looks like a fairly standard kind of spread out spending during the month of October. Doesn't look like anything particular stands out here.
Mike, can you just help us explain that difference between the headline beat and then the control group miss? What explains the difference between the two, just at a first look?
Well, first look, it would be that motor vehicles probably come in stronger than anticipated. The number of cars sold, the monthly seasonally adjusted total is what goes into GDP. So it's a little bit of a confusion there. Gasoline prices also go into the headline number. They were up only 0.1% because this is reported in dollar values. So those two things are going to have an impact on the headline, whereas the control group is basically your department stores, specialty stores, the retail stuff that you and I buy, and that's what goes into GDP. So economists pay more attention to that than they do to the headline number.
How noisy does this data start to get, Mike, heading into the holiday season? Is any of that captured in what we see today in this data?
No, it doesn't look like it because this was October, but we do start to see it show up in November. Even though Black Friday is what people think of as the kickoff, we've seen a lot of spending move backwards into November, and you'll see a lot of advertisements from retailers trying to push spending out over the months of November and December. So yes, it gets a little harder to separate out what the holiday spend is, but it is seasonally adjusted, so we get some idea of what the differences are. But we are, at this point, you'd have to say, looking at this, there's no reason to think we're going to have a bad holiday season.